Marc Faber, editor and publisher of the Gloom, Boom, and the Doom report. I love that report. The Gloom, Boom, and Doom. How did you come up with this name?
Well, it's a long time ago. I started actually to work in 1970 in New York, and then I immediately started writing reports, also for my personal use, and also because Americans were not familiar with foreign exchange rates and the value of the dollar against gold and the value of the dollar against European currency. So I wrote consistently reports also when I was at Drexel Burnham in the 80s, and then the crash happens in 87. And then people called me Dr. Doom and so forth. So I thought I combined the various names, Gloom, Boom, and Doom, because obviously there's also boom, and we discovered many emerging markets in the 1980s and 1990s. So that's how the name came about.
Yeah, that. So, according to you, where in the world there is gloom, where there is boom, and where do you think we are headed for doom?
Difficult question. You should ask me easy questions. Now, the point is this. The governments, they publish figures about the rate of inflation. The way you can measure inflation can change a lot depending. You take a basket of goods and services. Depending on how you weight that basket, you come up with totally different results. In my opinion, and this is based on the opinion of some observers that are accomplished statisticians in the United States, the US government is understating the rate of inflation meaningfully. And when this happens, you have essentially wage increases that are below the rate of inflation, the true rate of inflation. And so the government can show GDP growth, but the standards of living of most people is actually going down. This is not the case in India. Say, I've been traveling to India since 1973. I can say that the standards of living of the typical Indian family today is meaningfully better than in the 1970s, when the government was still ruled by the Gandhi family that essentially was implementing socialist policies that they had inherited from the British. And so the free market in India, especially promoted in recent years under Modi, has been a tonic for the economy. Now, I'm not saying it will continue, and I'm not saying the Indian market will go up. But if we look at the world and judge economies according to standards of living, I can say that in India, standards of living have been going up. And we have statistically very relevant information that the standards of living in Germany have been going down, in Britain they've been going down, and in the United States.
Mark, historically, a rate cut cycle is always accompanied with financial assets and especially equity markets. It has come down, whether it is 2001 or 2007. Do you think the same cycle could be at play, that rates will come down and eventually stock markets will come down because the rate cut means slowdown in the economy?
Again, we need to be very clear. Are we discussing nominal crisis or real economic activity? In my opinion, and I'm not talking about the 1% of wealth owners in the United States or people like myself. I'm involved in asset markets. I'm a beneficiary of inflation. As unpleasant I resent it as a social observer and economist. But as an investor, I love money printing. Nothing would please the money class, please Wall Street more than rate cuts that push up assets to even higher levels. They're already very high. The US as a percentage of world stock market capitalization is in the sky. But in my view, the standards of living in the US, in other words, I could say for most people, a recession began at the end of last year. Not for me and the richest 1% in the United States, but for ordinary people. And we have seen also with statistics about employment, these statistics have been faked. They are taken out of the sky, and now they have had readjustments to these employment reports that are showing a much, much weaker economy than the government is telling you.
We've always seen that gold is supposed to be a hedge. It goes higher when inflation. You guessed my question, is it? Your smile is telling me that you already know what I'm about to ask.
I think that if you analyze very clearly the debt level of Western societies, in other words, Western Europe and the United States, and you look at the interest payments that are now growing on these debts, the governments in the Western world, they have no alternative but to print money. They could go to the voters and say, well, we have to tighten our belts, you have to pay more tax, or we have to tighten our belts, you get less subsidies, you get less social security payments. You go to the police force and say, oh, your pensions will be reduced. You go to the veteran and say, your pensions will be reduced. I'd like to see that society in the Western world. There'd be a revolution. And the politicians who propose that, they're going to be voted out. So the money printing is a fact, and there is no alternative. And in this scenario where the quantity of money keeps on growing and we have excess liquidity, gold and silver and platinum and also cryptocurrencies will likely perform reasonably well. There are commodities that will perform better, like last year cocoa and this year coffee. But in general, individuals have a difficult time storing a ton of coffee. So to keep wealth and to have wealth that is relatively safe, and especially you can hide it from the government, you keep some gold and gold coins or gold bars.
Mark, you always look for bad news to find bargains. Over the years I've tracked you, I've always admired your ability to look at bad news to find good bargains. Where is bad news in the world? What is a good bargain according to Marc Faber?
Yes, I tell you, just recently, the Thai stock market has been in a bear market for about 5 years. And recently, a lot of foreigners have given up and written negative reports about Thailand and I think the stock market has bottomed out. I also happen to think that Hong Kong properties and property stocks have bottomed out. I have in my life never seen as much China bashing as is coming out of both the US media and the European media and politicians. These politicians are people, they never worked a day in their lives. They don't realize most of the goods that people buy in Europe, in the UK, in the US have Chinese components. And yet they bash the Chinese about everything. They bashed the Chinese when they built the railroad in Cambodia and Laos. And the Americans, what did they do when they went to Laos and Cambodia? They carpet bombed the country. And now they accuse the Chinese to do things the wrong way and so forth. I mean, You have to think clearly. The media in America and in Europe is anti-China 100%. And
Mark,
Chinese stocks are now cheap. Hong Kong property stocks are very cheap. Today we had a big move in property stocks in Hong Kong. And I've been telling people, I've been negative about Hong Kong properties for a very long time. I wrote a negative report in 97 about Hong Kong, about the rise and the fall of cities. It's a booklet. But now stocks are incredibly cheap.
we saw almost like a financial, Armageddon 2 weeks ago when the yen carry
Yes.
trade started reversing. It, in a sense, is the most popular trade. Do you think that yen carry trade reversal is over?
Well, I think the yen and other currencies will continue to appreciate against the US dollar. And let me explain why. The US dollar has been strong against just about any currency in the world until about 2-3 weeks ago. The price level in America, and you need to add to all the prices in America in the service industry, the tips. Tipping in America is like not a voluntary act, but you must tip people in restaurants, usually something like 20%. So the price level in America nowadays is very high. I have statistics that show that the yen was appreciating in the 1980s and 1990s, and wages in Japan became as high as in the US. Now, wages in Japan are about 1/3 of the wages in America. What it means is that in Asia, wages are about 10 to 15% maximum of the wages in America. So the price level now in emerging economies, including India, is very low compared to the price level in the United States. And I think investors will wake up one day and see how much money the US is printing and what the financial mess will become once people realize that you have to add to the existing government debt the unfunded liabilities of the government that arise from Social Security and from retirement plans and so forth. That is a multiple of the government debt. So the US has no alternative but to print money, and so the dollar eventually will go down. I think it will go down against just about any other currencies, but especially against precious metals.
Mark, so hypothetically, if someone gives you $1 million, hear me out. Somebody gives you $1 million. For Marc Faber, $1 million is less $10 million. I'll take the bid higher. For Marc Faber, it is 10 billion. I like that expression. For Marc Faber, it is $10 billion. And you're free to invest for next 3 years. But the money which you invest should give a 40 to 50% return in next 3 years. How would you invest that $10 million?
I give it back to you because I don't think that you will make 40 to 50% return in the next 3 years. And I want to sleep well at night. I don't want to lose you as a friend. So I will give it back to you and tell you, please give it to someone else.
What if I increase the time frame to 5 years?
Even 5 years would be 10% per annum.
Yes.
But I look at my money, which I manage among others, and I don't think that is easy to achieve a 10% return per annum. If you're diversified, I like to be diversified. I have different currencies, and I have gold, and I have stocks. I think in some emerging markets, I could see that I could make maybe 10% per annum including the dividends. The dividends would be, say, 5% per annum, and the stock return 5%, so maybe 10%. But I'm not sure that you make the 10% in real terms, inflation adjusted. That I wouldn't know. But I think that investors should move away from the belief to make money out of assets into the belief that something is not right in the global economy. And the question should be, how do I navigate negative returns in asset markets? Say, assuming everything comes down for whatever reason, everything comes down, how do I survive best if everything comes down? So my view would be probably precious metals will go down less than other items. But, if everything drops 50% and gold drops 20%, you are like a king because all your friends, they lost 50% and you only lost 20%. So, but what I want to say is really people should change their views and think we had this wonderful asset inflation for the last 40 years. It's going to come to an end. And when it comes to an end, it's going to go downhill. And when it goes downhill, you want to essentially lose the least. It's not a question to make money, it's just a question to lose the least. So that is my view about asset markets.
Mark, so when you say it's about capital protection and less about capital appreciation, where do you think we have the makings of what could be called as a bubble or a trouble? Where do you think this asset class, this market, this instrument, or for that matter, this a particular financial asset is headed towards a bubble?
Well, to tell you the truth, I think everything is in a bubble. I mean, now they sold a T-shirt of a baseball player who was a famous player, Babe Ruth, for 23 or 26 million US dollar, a T-shirt. You have to ask yourself, it's grossly inflated. But I think we can discuss what is the most inflated and what is the least inflated. The most inflated is the FANG stocks in sector in the US, the so-called Magnificent Seven. The Magnificent Seven, they have, according to the bank credit analyst, a market value, stock market capitalization, that is larger than all Chinese listed stocks, including Hong Kong. You have to, I have a chart on this subject. This is really something for the history books, that 7 stocks in the US have a larger market capitalization than China with 1.3 billion people and very large and successful companies that we have to see.
Mark, you may not recall, but I distinctly remember when we met you for the first time, it was in 2001 in India. That was right after 9/11. I was looking different, you were looking very different, I can assure our viewers, but that was 2001. You predicted that a big bull market in commodities was about to start. 2007, you were one amongst the first who said, look, there is a problem in the US real estate market, and 6 to 7 months after that, it really got punctured. What, to your mind, could be that 1 5 to 7 year mega prediction or mega trend according to you?
Well, my view is that over the next 7 years, the returns on US equities will be negative in real terms, inflation adjusted. That, I think, is quite clear. And I have maintained for the last 20 or 30 years that an investment in India would be more successful than a typical investment in the United States. I think now the Indian stock market is on the high side. I wouldn't necessarily rush out and invest in India, but I think there's some value in commodity markets. I think food prices are relatively low. And I have friends who are very well informed, and I mean, intelligent people. They think World War III is going to happen. I'm more optimistic because I'm an optimistic person. I hope that we can avoid it. But obviously, World War III would destroy pretty much all asset markets. That would be a terrible event. And over the next 10 years, as I said, or 7 years, I think if you can just maintain your purchasing power, you're doing okay. And so I still feel that precious metals is a favorable avenue. It may not be the best, but it's relatively safe.
Mark, I remember again a conversation which we had was that, Indians should start buying real estate in island cities, which is as Indians will get richer, you will buy more real estate, more holiday homes, and that is not
Yes,
true.
yes.
If I look
Holiday
at,
homes.
yeah. Anything else which do you think a country like India would, be consuming where investors could lay their bets right now? Because I think this conversation we had was in 2010, and you said that what's happened in Spain in terms of Spain got richer and everybody started investing in holiday homes which are in islands. And I can see that happening in India now. Holiday homes are becoming part of every, rich urban lifestyle. Anything else which you would like to pick out for our viewers?
Yeah, I mean, if I were in India, and I'm not a specialist on microeconomic facts in India, but let's say what I've seen, both in Switzerland and then in the United States, and also to some extent in Asia, is that a lot of collectibles go up a lot in value. I mean, I'll give you an example. My grandfather, he built a large hotel in 1910 in Engelberg. It's in the mountain. It's famous for the Titlis Mountain because the Titlis Mountain has an air cable that rotates 360 degrees while it goes up. And many Indians would have been to Engelberg and would know the place because we already had in the 1950s a lot of Indian visitors. And what I saw then is that old posters, propaganda posters about tourism, they went up a lot in price and became collectibles. So when I arrived in Hong Kong, I bought 3,000 posters of the Chinese revolutionary art, of the propaganda art of Mao Zedong. And then I bought badges and so forth. If I were in India, I would buy posters of famous movies and famous actors and store them for 50 years. And then you can get a very high price, I tell you. That's what I would do.
So, Mark, we've been speaking, talking, interacting on Zoom. When do we get to see you in India? When do we get the honor and the pleasure to having a cup of coffee with you right in our studio?
Yes, I'd like to go back to India. It would be very nice. I started traveling to India in 73, and then I went to many different places to the south and to Rajasthan quite a few times. The south is something that impressed me deeply because people are so religious, and it's a different atmosphere from the north of India. So for me, India is a wonderful country. And at the time I started to travel to India, it was very difficult for foreigners to get a visa. I was rejected here by the Indian consulate in Chiang Mai on numerous occasions, not once, numerous occasions, because the consulate was such, they always had the most arrogant people in the consulate and incompetent. And they singled out people who were, didn't suit them, and they didn't give them a visa. But now it's easy. Now it's no more a problem.
Pleasure to have you on ET Now. Thank you for joining us. And like I said, I love the title of the report, The Gloom, Boom and Doom. Thank you very much, Marc Faber.
I thank you very much for your time.
Thank you, sir. Thank you for
And I
having us.
wish your viewers and listeners all the best in their investments. And to remember that, as you know from your religion, that money is not everything.
Nicely said. All right, Marc, appreciate your time. Thank you for joining us. Let's take a
Okay,
break.
bye-bye.
That was Marc Faber, and over the years I've interacted with him. He's got this ability of getting some mega trends right: commodity, the decline in crude, the upcycle in the US bond market. He's really got this knack of getting it right, and he feels that FANG stocks are the Magnificent Seven. So what is FANG? I mean, FANG was earlier Facebook, Amazon, Apple, Netflix, and Google. Now it's become Magnificent Seven, which includes an Nvidia. Amazon
Facebook
still
is now
stays.
Meta.
Yeah, so it's become Magnificent Seven. With the inclusion, I think, is Nvidia, which is a new one which has got added there.
Yeah.
All right, let's take a
So
break.
did you buy that Goa Island as Marc had recommended many years back?
You should always have aspirations in life. So yes, you aspire to do it one day, hopefully, if God is kind.
Okay. On that note, we're going to take a very quick break. Come right back. We'll continue tracking markets, the last half an hour of trade this afternoon on the other side.
If you like this video, then like, share and subscribe to ET Now.